Hello, everyone, and welcome to our panel on the next era of competition and cross-border payments. So before I turn it over to our panel, let me just take 1 minute to set the stage for what we plan to discuss. According to McKinsey's latest analysis, on the retail banking side, we see banks losing over 50% of share in retail cross-border payments to digital attackers. So that means today, on the retail side, over half of cross-border payments are happening outside of the banking sector. And we see that disruption coming to B2B cross-border. You can see digital attackers ramping up and competing on experience and cost. The G20, as you all know, and the Financial Stability Board have made improving cross-border a priority. And so I think banks should be feeling at least a little bit scared. B2B certainly is a much more significant part of revenue, drives high stickiness, ancillary services, and there's a lot of pressure in the banking sector to reduce costs and improve experience. So in light of all of that, this panel is going to explore how banks are evolving to better compete, what alternatives in terms of infrastructure exist, and they may even predict some winners and losers in the coming 5 years. So without further ado, let me turn it over to our panelists. Would be great if you all could introduce yourselves, and then given the competitive landscape is quite complex, it would be great if you could share with the audience what your organization does and where you play along the value chain for B2B cross-border. Why don't I start with you, Martin?
Thanks, Grace. My name's Martin van Rossum. I'm responsible for cash management sales for our fintech and FI customers at Barclays. Barclays is a British universal bank, so we play across the entire spectrum of the banking industry, from retail to corporate to investment banking. And within the Global Transaction Bank, which is the part of the bank that I sit in, we have a number of parts of the value chain that we participate in. Of course, we participate at the front with our corporate clients in our home markets, where we offer cash management services, but also as an intermediary through correspondent banking for our FI and increasingly fintech clients as well. And then at the end of the value chain, we operate with market infrastructures, where we provide access to market infrastructures to other parties and to central bank settlement for liquidity. So a lot of different roles, a lot of different perspectives, unique insights for each.
Great. Go ahead, Pat.
Sure. Hi, I'm Pat Antonacci. I'm the Chief Customer Experience Officer at Swift. I would assume most of you know what Swift is and you're using Swift, but we provide the secure, resilient infrastructure along with standards and the products and services that help you facilitate the movement of the world's GDP every 3 days. We have about 11.5 participants on the network. I won't say only banks, because there's more than banks that are on the network. And they're facilitating for your customers to touch over 4 billion accounts in 40,000 different corridors when we look at payments in 200 plus different countries and territories. So we provide that kind of secure infrastructure for you to support your customers as you do cross-border business.
Thank you. Ben Ellis with Visa. Similar to Swift, I think most people know what Visa is, at least what the traditional Visa is in terms of our credit card and debit card business. More broadly than that, though, we're a payments company, and that includes cross-border payments and supporting that. And importantly, we approach it in the same way that we've approached everything else, which is we work with our banking partners, not around them. We work with the established regulatory and compliance environment. And we look to add value where we can in terms of building the technology, building the platforms, building the standards and the capabilities that help our banking partners better serve their clients.
Thanks, Ben. And what a privilege it is, because I'm sitting with 3 really great partners around the world on this exact topic. So it's a fitting panel. Matthew Parker-Jones. I'm the Global Head of Cash Management Product and Operations for Scotiabank. Scotiabank is a multinational bank based out of Canada with operations from Canada all the way down to Chile, Santiago, Chile. And we offer universal banking across 27 countries in that footprint. So everything from retail all the way up to corporate cash management and servicing financial institutions. So very near and dear topic for us because not only are we seeing a lot of flow within our network, but certainly in the retail space, we have countries that are creating and initiating remittances. We also have countries in the footprint who are receiving those remittances. So we see a lot of flow within our network, and this topic is very near and dear to us and our strategy and how we support our client base.
Great. All right, so let's dig in. Matthew, maybe I'll tee up the first question to you, and then others can chime in. But McKinsey's latest survey suggests that 7 out of 10 banks are actually looking for alternatives to traditional correspondent banking. So I'd love to hear from you. How do you see banks evolving their B2B cross-border payment services to better serve customers? And are there any tangible things people are doing that are really driving value?
Yeah, no, absolutely. And I think whenever we develop new products at the bank, we always try to start with the customer. And it sounds really cliche, but we spend a lot of time with our client advisory council, speaking to our corporate clients, speaking to our financial institution clients to understand what are their needs, what is important to them, what are they seeing. And one of the key insights that we've taken away over the past year or so is from those dialogues, is that what we're seeing on the retail side of the business, the convenience, the speed, the transparency into fees, the ability to do payouts, the things like digital wallets, those elements have really transcended the retail side of the business and are now permeating the corporate and commercial side of it as well. And that is requiring us to look at our partners, our network, what can we do for those customers and what we can bring. Practically, I'm not going to be able to connect to every digital wallet, and I'm not going to be able to settle in every currency or have every endpoint. That's just not who we are. We don't have the budget. I want to do in my footprint and be the best I am in my footprint, but I can't be everything to everyone. So that's requiring us to look at our partners and to see, well, who can help bring us to those markets? Who can provide kind of a single point of entry, help me bridge in, step into that market and step out of that market? And we work across, so it's not just one partner, but we really view ourselves as being an aggregator of partners and then managing that complexity for our customers. So the way we've built our channels, the way we've built our product is we own the front door. Our client comes into our front door, whether that be an API or a portal or host to host. And then we manage the complexity of having those different partners behind the scenes, not just for wire payments, but for payouts to digital wallets, for payouts to a card, for payouts for a real-time payment or a low-value payment, and we will navigate that for them, and we'll be transparent with the terms up front. And that has required us to rethink the way we tool, the way we speak to customers, the way we think about economics. So it's been a real change exercise, but I think that's just going to continue because corporate treasurers are expecting the same convenience that they get in their retail lives in the corporate space. So we see that trend continuing, and if anything, accelerating over the years ahead.
So Matthew, though you and Martin are both from rather large banks, I want to ask your view on the implications of all the things you just said on the ability for a mid-tier bank to actually compete in B2B cross-border. So I'm curious, do you guys see, you look down the road, larger banks keep taking share? Are there any mid-tier banks that survive in this space? Would love your thoughts.
I think it's there's some great challenges for the mid-tier bank, especially if you look around technology and investment. It's the amount of investment that's required just to keep up with regulation and with all the changes is immense, and that's something that's challenging for the largest of banks, let alone for the mid-corporate banks. But there's also advantages there. The mid-tier banks are much more, dare I say, nimble than the global banks. They're much more open to partner with other new market entrants to see if they can put an offering into the market and to outsource some of that development. And I think the strength that mid-tier banks have, especially, is the relationships, the strength of their relationships that they have locally. And in the previous panel, we heard a few examples about this as well. I think that's where the real strength lies. So there's big challenges, but also quite a few opportunities there.
So you're bullish?
Yes. I would say.
Yeah, I like to draft on Martin's point. I think there's a real opportunity for mid-tier banks to customize things and to do things for specific client sets and be specialized that are very difficult for me to do because of the scale that I have to operate at. So I think you're going to see increased specialization, whether that be on certain geographies or certain industries where it doesn't make necessarily economic sense for me to do that because of the platform, but you're going to see them target specific areas, go very, very deep, where I might not be able to specialize in that domain. And I think that's always going to be the tension, which is going back to my comment around you can't be everything to everyone.
Yep.
I think when you're resource constrained, that is even more an acute problem, and you have to be really, really deliberate in terms of what you choose not to do, even more so than what you choose to do. And it's going to be very deliberate things that you're taking off the list of capabilities.
And I think that can also be an advantage, because if you are focused and you know what you're doing, you know which clients you're focused on, which segments, what service you provide, it can be very empowering. I think, as you said, I think if you're trying to compete in an arms race as far as technology and platform and building it up, that's going to be very challenging. It's going to be challenging for everyone, but it's going to be in particular challenging if you're not one of the largest players. And so I think there's an element of knowing what the focus is, where the value add is, how to drive that, and then thinking about how to partner and deliver the services that are needed to be delivered through other means.
Completely agree, Ben. Like for ourselves, we span the Americas. That's our focus, Latin America, North America. We get inbounds from clients. Can you do this for us in APAC? Can you do this for us in Europe? Is there, an opportunity there? For sure, but that would be a distraction for us. Like, we have expertise, we have a corridor, that's what we do that well, right? I'd rather double down on strengthening that corridor than kind of start wandering and lose focus, right? That's when those distractions, those hobby projects, those are the danger, and and as you get down to smaller organizations, you really have to be judicious with your time and capital.
Yeah, and I think the mid-tier banks have an opportunity to go up market, right? Because they concentrate on the specific niche that there's the demand, where sometimes the big banks are trying to do too much, and with the old technology or the spaghetti that you need to unwrap, and they can be more nimble in partnering with different players and new technologies.
So I guess whether you're a mid-tier bank that is going after a niche specialized play or a large bank doing the orchestration, like you said, infrastructure is key, right, to making cross-border payments better. So maybe, Pat, we can start with you, and then would love Ben to chime in. What are the alternative infrastructures that exist for improving, B2B cross-border?
Yeah, I wouldn't use the word alternative necessarily. I think what you've already heard and what I think we heard over the last 2 days so far is around the collaboration and the partnerships, right? So where are there the right opportunities to use new technologies or disruptors in some cases? I think 3 to 5 years ago, we were talking about all the new technology as disruptors. Now it's a lot of partners, a lot of collaboration. We've announced collaborations with Visa, with Wise, et cetera, not to replace the banks. I think the banks still have their core place in that process. But when you bring the participants together and look at the efficiencies that you can gain in leveraging that technology, SWIFT is a cooperative for the banks. So we're delivering on helping all the banks to provide a better service and a faster service. Talked about the G20 goals, right? And I think yesterday was mentioned GPI, and the future leaders talked a bit about some of the disruption or new channels yesterday that could come into place. But when we look at what we did in bringing the community together for something like GPI at SWIFT, we heavily moved the needle in our ability to track and trace, right? So now you're actually tracing more the end state of when things happen. There's still work to do on the front end so that there's the transparency on the front end so that customers know what's going to go, when it's going to go, but we can at least trace when it gets there and how much got there, as well as 90% of the transactions are now going to the bank within an hour. So speed is also there, but there needs to be that additional on things like pre-validation that we've now offering to the community. You need the front-end players to put the pre-validation into the payment application that will provide that transparency that your account is valid. Pre-validation can just be a channel to facilitate pre-validating anything that you want to do as part of that process. So I think the collaboration and the interoperability is where we're really concentrating on with some of the new entrants into the space and some of new models where market infrastructures want to talk directly to one another and they don't know if they need the banks anymore, but somebody needs to figure out where the liquidity is going to come from. We need to make sure that we can help facilitate and interoperate that. There was some talk yesterday as well on ledgers, whether it's CBDCs or tokenized assets or ledgers that are created in a specific market. We need to make sure that those don't become digital islands on their own, that only ASEAN 4 countries can talk to one another, and then you can't really go cross-border in that process. So to me, it's not so much replacements, but more around the collaboration and interoperability in that space.
Yeah, I'd agree with that. I'd add on. I think if you go back 5 years, there were 2 broad camps of challengers, and there were the ones that were trying to replace and change completely, and those looking to partner. I think a number of the ones that were looking to say we're going to do it in a completely different way found out that it's a little bit harder than it looks, right? You have to deal with settlement, you have to deal with compliance, you have to deal with the actual service delivery and executing, right? And close enough sometimes isn't close enough. I think the partnership model has proven to be more durable and more successful partnership with the banks. It's certainly the approach we've taken. And it's one where we're looking at it and we're saying, where can we differentially add value? Well, it's around technology, it's around investment, it's around building things similar in many ways to Swift, where you can build it once and everyone can benefit from the capability and the benefit. So that as you're looking at things like a pre-validation or whatnot, where the benefit to the community is broad, right? But it does take a little bit of upfront build. How can we go and from an infrastructure and from an additive perspective, make it better for everyone so that everyone benefits?
So maybe we unpack that just a little bit, because Ben, I've heard some people express not confusion, but not clarity around the B2B Connect solutions. And you talked about partnering with it. Can you just share a little bit about what B2B Connect does and how you partner with Swift and the service that you're providing? Yeah, so B2B Connect is something that we offer at Visa, and it's an opportunity to support our banks in sending cross-border wires, right? And so we are working more broadly with other parts of Visa as well too that support other types of cross-border payments, whether it's more of a cross-border ACH or a remittance. And importantly, we do it in partnership with our banks, many of whom are here. We do it in partnership with Swift, with some of the things that we've announced in the last year. And our goal really is to enable our banks to better serve our clients. So if there are corridors that maybe it doesn't make sense for a bank to get into, right? If business clients are expanding into new markets and people are saying, well, how can I better serve that? How can I do it? Are there ways where through B2B Connect we can help deliver some of those in a way that complements banks' existing offerings and allows the bank to focus on serving its clients and delivering the best cross-border experience in terms of predictability, knowing when the funds will get there, knowing that it'll get there with full value, having the ability to track the payment along the way, having the ability to get the confirmation of when the payment arrives. Those types of capabilities that we find when we talk to banks and banks are talking to their clients that they're really, really looking for. So it's a partnership model. It's one that we're excited about. It's one that we've heard good feedback on and one that we're looking to continue. So then what I'm hearing you guys say is on the infrastructure side, lots of improvements in motion through collaboration, GPI, B2B Connect. Now, I'm going to say something that hopefully isn't controversial, but banks are notoriously slow. So I guess I want to ask the panel, do you guys think change is happening fast enough on the banking side, or is it, GPI started many years ago. How do you guys feel about the pace of change on the bank side and whether it's going to be fast enough to meet your customers' needs?
Yeah, as a bank, let me take that one, and I won't argue with you. You're right. It's a glacial pace at times. I think the change in infrastructure changes that are coming aren't driven so much by the banks in terms of speed, but it's when the regulator gets involved, then it really starts to move. And you see this in particular markets, like if you look in India, for instance, the government is very keen to get migrant flows back into the country and not lose a lot of money on the transfers. So they've really been pushing connections, interoperability between their instant payment schemes and those in, for instance, the Gulf nations. In Asia, you have the same thing. It's the Singapore instant payment scheme hooked up with the Thai and the Malaysian one. And the driver behind that was the government, because they needed to provide that kind of interoperability across the region. And arguably, that's how SEPA came about as well. It would never have happened without the regulators. So the driving force behind it is really the will of the authorities to push something, and then it happens. I will agree with you that it's not necessarily going to be the banks that drive that.
Yeah, but I think it's a balance of the partnerships and the collaboration. You could say banks are slow, but banks now partnering with fintechs for specific skill sets, for specific things that they need to facilitate that, right? For organizations going to the cloud or using APIs, I won't get into AI topics, right? But I mean, those are the ways that I think the banks are able to move forward and able to meet those regulatory changes or the requirements that are there. Otherwise, the only spend would be on meeting regulatory requirements and not on what the clients really need and listening to what the clients really need and demand. But I think that partnerships that are happening between the fintechs or the front end that banks are using to facilitate that transparency and the speed and these collaborative environments, which again have the risk of becoming digital islands when Thailand, Singapore, and Malaysia are all talking to one another, but then they can't talk to Japan or can't talk to the US or Canada, et cetera. Yeah. That's where the challenges come when regulatory pushes it and it's not a standard regulation. And that's where I think some of the things that we're trying to do to create that standardization so that when these do get created, they can come cross-border. ISO 20022 is a great example where, from a SWIFT perspective and a cross-border perspective, we're doing that, but also you have all the domestic market infrastructures going, so that there is that kind of standardization, regardless of whether you're doing a domestic or cross-border transaction.
I think that's a really important point that Pat just made, because there's a lot of noise out there, and you got to separate signal from noise. There's a lot of flashy stuff out there in terms of this new coin or this new CBDC or this new that is going to change the world and eliminate correspondent banking or eliminate the relevance of the banks. But scale and standardization sound boring, but those are the real change makers, right? When we getting everyone to ISO, that is a big change for the industry. Getting things like pre-validation out, those are big changes. And they move slow because you have to move the entire ecosystem along with you. Yeah. But those are, for me, the most exciting things. And you have to kind of do that as a group, because kind of a siloed experiment that gets a lot of media airtime isn't actually going to improve the lives, or the ecosystem for correspondent banking. It's going to be the things we do as a collective. And inherently, that has to go a bit slower so that we move as a pack.
Yeah, and real quick, I'm based in San Francisco, and a lot of the tech companies out there talk about moving fast and breaking stuff. They don't always say stuff, they might use a different term, but move fast and break stuff. That's fine in technology. That doesn't work so well for what we do. You don't want to break stuff, in what we do. But barring another quote from a tech leader, one of the things Bill Gates has said is we often overestimate what you can accomplish in 1 year and underestimate what you can accomplish in 5 or 10 years. And I think one of the key things we've seen, is it too fast, is it not fast enough, whatever, it is relentlessly forward what we do, whether it's GPI, whether it's some of the other things that we do. And when you look over a 5-year horizon or longer, the progress that gets made is real and is tangible, and to your point, it's durable, it lasts. And I think that's incredibly important for what we do.
I love that, and I hear you on scale and standardization, moving an entire industry. So then I did want to, though, ask you guys about, on the fintech side, understanding the limitations and the breaking stuff, but what do you see as innovations when it comes from the fintechs on B2B cross-border? And I'd also love your thoughts on, are there any tangible examples of fintech bank collaborations that are really driving value? Maybe I'll start with Martin and then open it up.
Yeah, I think the area where we see the best examples of fintechs really innovating in this space is in Asia. At the moment, you see new fintechs emerging that are targeting specifically corporates. Very often they have a very niche focus, like they only look at travel companies, or they'll only look at exporters that are selling on e-commerce platforms abroad. And they're creating a network ecosystem, cash management ecosystem with in-country accounts, virtual and physical accounts on behalf of those clients that can be used to distribute payments locally, to collect payments locally, and to execute other payment types that might be native in those markets. And importantly, they're doing it in a compliant manner. So, and by creating this infrastructure, they're creating quite a sophisticated offering for their clients, which is something that up until now has only really been available to large corporates. And they're innovating by the cross-border part, by taking the cross-border component out of the payment. In the large corporate clients, that's where we see a different kind of innovation, where the clients themselves are taking action and creating PSPs or turning themselves into PSPs in order to facilitate their own payment flows. So an example of that would be Amadeus, the travel management company in Spain. Just last week, they launched a fintech called Outpace to facilitate their own in-house flows, of which there are very substantial. And overnight, that became the largest fintech in Spain, or largest payment service provider, one of the largest in the market. So you see, all of this is made possible by the PSP licensing rules and regulations in different countries, and increasingly the opportunity for PSPs to be able to access schemes directly without an intermediary. And that, I think, is a real game changer.
Maybe to add a Latin American flair, I think that LATAM for us is probably where we're seeing the much more innovation than North America. I think oftentimes innovation comes when there's an opportunity to do that step function of value for the customer. And I think it started with things like Pix in Brazil and QR codes, and it's amazing the change every time I'm in Latin America, the new payment methods that have come through, the digital adoption that's happening. And that's not just on the retail side. We're seeing tremendous change in trade finance, supply chain financing, factoring, with fintechs that have really emerged as kind of breaking down barriers, looking at different ways of assessing and adjudicating risk. So I think a lot of it is a function of where is there gaps in servicing, where is there gaps in digitization, where you're going from paper or from a very kind of archaic system, and you're able to leapfrog kind of the generation of technologies that were prevalent in North America or Western Europe. And I think because of that, LATAM is going through a very significant moment of innovation and growth. And as we look at some of the investments that we do as a bank, a lot of the things that we're doing is we're taking ideas from Latin America and we're trying to bring them back to North America because they've leapfrogged a generation in technology and capabilities, and they're great ideas that we can actually now bring to North America.
Yeah, and building on that a little bit, I think just thematically, for banks, and in particular for corporate and commercial banks, a lot of times good service meant people. You know, I have people who can engage, react, solve problems, get things done, you know, step in when something doesn't go quite as expected. I think the fintech approach is you want to automate, you want to do self-serve, and if a person has to get involved, that's actually friction. It means something is slowed down and isn't working as well. So one of the things you see, you know, tied to that is you see a real push and desire to say anything that can be automated in a self-serve way while still delivering the right standards, overinvest in that, because that's going to be what helps scale and what helps provide ultimately a better long-term experience, which I think is maybe a little bit of a different mentality than the industry had traditionally come at it from.
And it's based on what the client's asking for, right? This generation is asking for immediacy in their retail side as well as in their B2B space, right? How can I not have to call and wait for an agent and speak to an agent and get transferred to another agent, but get that bot that gives me probably 90% of the questions I'm going to ask can be answered, just I don't know where to look, or it's easier to do. I do that now with my kids. I look on YouTube to figure out how to, you know, fix plumbing or fix something in their car or whatever else, whereas you used to bring, you know, the car to a mechanic or whatever. You could do a lot of that yourself now, and it's easier self-service.
Well, so I guess given that, I sort of teed up this panel by saying banks should potentially be scared that what's happened on the retail cross-border side will happen in B2B without action. Do you guys see any scenario going forward where fintechs or digital attackers or non-banks do get to, you know, over 50% share of B2B cross-border, just like it's happened on the retail side?
I think a lot of the value, maybe I'll start from our perspective, like the value that we provide as a bank is more than just the payments, right? The payments, there's a slow and steady race towards commoditization that's happening. Like the value that we try to provide is the advice, it's the value-added services that sit on top of that. And so as we see this, fintech encroachment, if you will, if I can use that term, into the payment space, that doesn't give us concern or alarm. If anything, it reinforces our strategy, which is be close to the customer, make sure you're providing services, make sure you're providing advice. We're partnering more and more with fintechs behind our front door, but we're curating a set of fintechs that we bring to our clients that provide differentiated value in spaces that we don't want to necessarily make an investment into. But we have a fintech who's wonderful or excellent at a specific vertical. But in terms of the payment space and disruption there, I think there's a level of us welcoming that and welcoming new ideas and welcoming people to that table. I think we're better together if we can tackle these problems. They're complex problems. But I think the important piece is making sure that we're doing so not as a side of the desk exercise or in pockets, but making sure that we're drafting behind some of the great work that Swift's done in terms of collaborating with Visa and collaborating with Wise, where we're bringing those fintechs to the global community as partners and leveraging that innovation at scale with the access that partners like Swift have. But from a bank standpoint, I think the proximity to the customer is always going to be most paramount for us, and that's how we create value.
Well, before I go to my last question, why don't we make sure we answer the audience questions, and I'll save my closing question for the end. So there's a little glare here.
For Ben.
So I'm gonna look here. For Ben. How soon before there is broader adoption globally of Visa's B2B Connect? Great product, but it's not been adopted very universally yet.
So thank you for the question, whoever asked. I get asked that a bit from our executive team from time to time, as you might imagine. Why hasn't it gone faster or whatnot? And what I'd say is it's actually in some ways similar to what part of our prior discussion, which is things take time to do it properly, right? And when we go and work with banks and sign up banks, they want to do all the due diligence to know it's going to work exactly the way it's supposed to. What happens on the corner cases? How do you handle this? How do you handle compliance? All that, and that takes time, right? Similarly, when you work to integrate, there's ways to do it, faster, but there's time to get into the tech budget to do it. What I will say is, similarly, it is relentlessly forward, right? And so we are much further along now than we were 2 years ago. We will be much further along 2 years from now than we are now. Whether when it'll be universal, I don't know. That's up to us and a lot of the folks in this room and how we work and what we do. But what I do know is that we're continuing to push forward, and we will listen to our clients and we'll listen to our partners, and we'll continue to work for the betterment and the improvement of the industry.
So for the whole panel, what are your views on some of the regional payments infrastructure developments, such as Buna, PAPS, et cetera, and the impact they will have on the B2B landscape?
So I talked about a few of these before as well, and I fully agree with what you said in the fact that they are very good opportunities to improve the cross-border payment landscape, but we are at risk of creating a hugely fragmented landscape. And there's just no way that you can maintain all of these different connections with all these different systems, and they're all slightly different. That's something that no bank can really do. And we come back to the likes of Swift and other kind of industry bodies that need to maintain that. So I think that they're good developments, but they're not sustainable unless there's harmonization across them.
If you play it forward, what do you think will happen down the road with this fragmentation? How will the harmonization end up happening?
Ultimately, the infrastructure, so these market players will catch up. And I guess this comes back to the speed element. We're not slow because we want to be slow. We're slow because it's difficult to get that kind of harmonization across such a large region. If you look back at GPI, that took a really long time to come to what is a really good solution. But in order to get everybody facing in the same direction, that was just a long, drawn-out process. So ultimately, it will catch up because the problems will become unmanageable, and then it will be brought to a single organization and with an ask to kind of harmonize that.
Yeah, I think we're ahead of it a bit in that we're recognizing that these are bringing value, but there's a risk of creating these digital islands. And to start having those conversations now to make sure that they do operate in a way that can interoperate with others, I think is good. We did that a bit with ISO 20022. You know, it's a standard, but then there's a million ways you can use it. And different market infrastructures, we're looking to locally use it in different ways with different specific codes and things like that. And we help that community to, as much as possible, standardize so that it is the same for a bank interacting with one market infrastructure or another, or acting cross-border. So I think if you catch it early enough, and some of the things we're trying to do is figure out how to create standards for that, and how to create a model where there's interoperability, where there's transformation layers that can be put in between to maintain that full global cross-border B2B versus regional cross-border.
Yeah, it sounds like it goes back to the standardization and scale through interoperability. All right, last question. Are you seeing a trend in terms of a shift in the underlying payment or settlement currencies?
This is an interesting topic because for years now, the discussion every time when it's about, oh, we're going to move away from the dollar, but there's absolutely no evidence of that in discussions that we have with clients. The distribution of payments that we have when we speak to our FI customers has remained relatively stable and hasn't really changed all that much. So I'm sure there are definitely things changing in the background, but it hasn't gone as fast as some have predicted.
I think it's certain specific domains. Like I completely agree, Martin. Like we remain a highly dollarized economy, and I don't foresee that changing significantly in the coming years. We do see specific areas, particularly for ourselves in Latin America, where we have RMB or yuan, right, for specific things in infrastructure or in commodities and energy. But that is a very targeted domain because of some of the FDI flows that we see coming in from Asia into Latin America. But apart from that, it remains highly dollarized.
Well, I have to ask, is there anything you could foresee happening that would change the dollar as the main currency? Any?
Probably should have asked that to the economists.
Economists, okay. Black swan event that we don't know. All right, so another question. How do you see the Agora project into cross-border payments and the participation of banks, SWIFT, and Visa?
I mean, we're engaging. I think the banks are engaging. It's again, a new project with collaboration, but also opportunities for risk in creating digital islands. But I mean, I think some people are public or not public on what they're involved in or not involved in with a lot of these different projects.
Okay. So I'm going to ask my last question now because I promised the audience some level of prediction of winners and losers without getting too provocative. So would love just us to close with everyone's thoughts on, you know, if we talked a lot about the competitive landscape, about what banks are doing, what new infrastructures are available, what collaborations are happening, what fintechs are doing. So you play it forward, and it sounds like everybody agrees everything's moving in the right direction across the ecosystem. But look out, you know, next 5 years, best crystal ball you have, you know, how do you see the winners and losers in this competitive landscape?
I think we may all say the same thing, so I'll go first. I mean, I think we discussed a lot, you know, the being close to the client. The key is understanding what the client demands and how that's moving and how that's shifting into the B2B space from what they do every day. And the players who concentrate on that and concentrate on the niche of supporting those clients and those specific clients, I think are going to be the winners. And those that don't or you know, jump on the bandwagon of the latest technology without a problem that it's actually fixing are going to be the ones that are going to get left behind.
Yeah, I think there'll be two categories of winners. I think the first category are the customers, you know, those who are sending and receiving payments, because I think the competition, I think the collaboration, I think everything is going to make sending and receiving payments a much better experience going forward than it's ever been. I think, building a little bit upon what you said, I think from the perspective of providers and industry participants, the winners will be the ones who know where their value add is, right? For a lot of them, it will be, being close to the client, knowing the needs, understanding the full relationship, right? It's not just the payment, it's the full relationship. I think there'll be others for whom, the value add might be building the technology, building the platform, building some of the supporting infrastructure so that others can actually support and serve the end clients. And I think the important thing is to know where your organization can add the most value and focus on that, right? And then for the parts where not, find the partners or the other participants who can help drive that, and by working together with the collaboration, really drive it forward for the customers.
I do think on the technology side, I think there will be a point, I don't want to put a crystal ball of date, in which ledger becomes a viable piece. But I think from a winner standpoint, it's not going to be the person who gets it. That is kind of the easy part. The winner is going to be who can crack that, but then collaborate with the likes of Swift and the likes of Visa and the likes of Barclays and Scotiabank to make that a viable solution globally. It's not going to be somebody who is kind of doing it on the side and trying to disrupt and displace the entire financial services system. It's going to be somebody who stretches out, a hand and says, "Let me work with you. I've got something. Can you help me bring this to your platform?" And I think it's too early to say who is going to crack that, but I think there is value in that technology, and I think all of our institutions see that. But it needs to be additive to the conversation, additive to the customer. It needs to fit into that value chain for the ecosystem at large, and then we need to be patient so that we can bring along the ecosystem so that it actually scales properly.
And I would say indeed that it's very likely that we are going to see the same kind of disruption that we saw in the retail space in the corporate space over the next couple of years. In fact, I think we're already seeing it today. Some of the fintechs that we talked about are going to be very successful in doing this. But at the same time, the pie is getting a lot bigger as well. So there's room for more winners in this space. There's nothing to stop us as banks from disrupting, doing a bit of disruption ourselves. And you see banks creating fintechs to do just that. So ultimately, I'm not sure who said it, but whoever really goes after what the client needs and is able to deliver that, that's the winners. And there will be a variety of them.
Excellent. Well, thank you all for the great discussion.
Thanks.
Thank you.